Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. And coming up on Trading Day, we'll have lots ahead of it, but let's get to some of the stories we're following in the BNN Bloomberg newsroom. Oil prices are on the rise again after conflicting statements from Iranian and U.S. officials reduced hopes for progress on ending the war. U.S. President Donald Trump has urged Iran to get serious about negotiations or face the consequences. Officials in Iran say they have no intention of having talks with the U.S. The Bank of Montreal is betting on its U.S. segment to accelerate growth and lift returns. Speaking at the bank's Investor Day, CEO Darryl White said the company is counting on a rebound in its U.S. business to boost overall results as well as growth in its wealth management segment. The U.S. division accounts for more than 40% of BMO's earnings but has underperformed in recent years. The lender is also targeting a return on equity of more than 15% by 2028. Rio Tinto has shut down its final diamond mine, ending more than 50 years in the diamond business for the world's second largest miner. The company confirms that the Vivek mine in the Northwest Territories has produced its final batch of stones. The closure marks Rio Tinto's complete exit from diamonds as it shifts to focus on core commodities like iron ore, copper, and aluminum. And taking a look at the markets right now. After a start in the green, the TSX has done an about face and off by 0.72%. U.S. markets, same situation. All the uncertainty is playing out here again. S&P 500 off by more than a point now. The Dow by 2/3 of a point, and the Nasdaq nearly by 1.5. Yeah, the oil stocks continuing to face volatility today as U.S. President Donald Trump said he couldn't commit to a deal to end the conflict in Iran. Here to talk about the state of oil, gold, and other market movers today is Michael DeHaul, Senior Portfolio Manager at DeHaul Investment Partners at Raymond James. Michael, thanks as always for joining us.
Thank you, Roger. Great to be here.
Last time we talked, we had some exciting things going on, and we again have nonstop with this market. Where are you standing right now? How are you even approaching it in the middle of all this?
This market, it's a market where when you see oil up, bond yields up, stocks down. When oil's down, yields down, stocks are up, right? So this whole week it's been a ping pong, if you will, right, type of environment. It's headline driven. There's no real conviction for investors to take any side or position until we get more resolution on this conflict in the Middle East, right? And until then, you're going to see increased volatility. The VIX is around 26, 27. And investors are just kind of waiting and to see what happens next.
Yeah, I mean, we saw a good rally to start the week with the optimism, but it quickly wears off. I mean,
yeah, it was great to see Monday. The markets, we had a great rally on Monday. It kind of faded later in the day, but then Tuesday was a complete opposite. Wednesday, we were up yesterday, and today we're back down. And like you mentioned, it seems like a ping pong. Oil up, stocks down, and it's really concerning as this conflict continues, and investors are starting to worry about the impacts on inflation, central bank policies, whether the Fed is now, are they going to cut rates in 2026?
Yeah. What's the biggest concern for you? Is it the inflation shock, the oil shock, stagflation's a very real possibility, or rate cuts?
Yeah, I think for now,
or all of the above.
All of the above are concerns, right, Roger? But I think right now, first and foremost, is the inflation shock, right? So we haven't seen the inflation come into the CPI, PPI numbers yet. But we will see those numbers, go higher in the coming months if this drags on. You're seeing gasoline prices in Canada and the U.S. Going higher by 25, 30%. So inflation is definitely having an impact. You're going to see higher food prices just because the fertilizer prices are going up and some of the other agricultural prices are going up. So inflation is definitely a concern. On the economic growth side, we're still seeing pretty robust growth. So we're not too concerned about the growth. Stagflation is something that is still in the back of our minds, but it hasn't come to the forefront yet. Remember, stagflation is higher prices, slower growth. But as growth remains robust, we still think it's more of an inflation-driven energy shock story.
And so where does that leave you? Where are you kind of looking How are you handling that if you're thinking it's just going to be inflation?
If it's inflation, so basically you got to be into more inflation areas where companies have pricing power, right? If we do see an inflation shock that we've seen in 2022, obviously consumers are the ones that feel that pain more than corporations, right? If corporations are able to pass on the pricing to consumers, it's great. It'll continue with their gross margins. If not, it could have an impact on certain stocks across the board.
And now, are you surprised at all that it's kind of stayed where it is? Or not? I mean, it's up. Don't get me wrong, but it hasn't. We were talking 120. We were talking 50 even. Yeah. Yet it seems to have flattened a little bit.
Yeah, to be honest with Roger, the market impact, it's still contained. I think even Donald Trump commented this morning that he thought he would see more of a severe impact on oil and on the equity markets. The S&P drawdown is 5-6% from its all-time highs, right? Mm-hmm. Given the severity of the situation, it's still been somewhat contained, and I think investors are looking past the conflict for now. However, if this continues for another 2, 3, 4 weeks, we could have a different conversation here, right? So right now, oil around WTI around that $90 to $95 range still remains range bound. But if this continues, we can definitely see a march higher to above $100.
And when does it become really dangerous? 2, 4 weeks, or is it all? It all depends.
It all depends. Honestly, it's such a binary type of event where it's headline driven. But we do know on the onset of the war, Trump did mention that he expected 4 to 5 weeks. This is week 4. So this week and next week are the critical, timeline for this war. If it goes beyond the next 2 or 3 weeks, then, like I said, we'll have a different conversation. And I think the equity market could take a leg lower if this does continue on.
All right, but there are always some opportunities. Gold has been an interesting situation.
Yeah.
I think everybody thought it would shoot up with this, and it's gone the exact opposite. It's flat. It's calmed down a little bit, but still.
It's calmed down. Gold, interesting. It's in a bear market. So from its recent high,
it's about a 20% correction.
Yeah,
right?
21%. So it hit, over 5,500 in late January, and then last week it fell to about 41.
Now 4,400 now.
4,400 now, yeah. And so it's in a bear market. We think it's more short-term dislocation rather than the fundamentals underpinning the gold story. We still think gold is in a structural bull market, just on the back of persistent geopolitical risk, central bank demand, especially from the emerging markets, and the prospects of a weaker U.S. dollar over the longer term. And so we think the underpinnings of the structural bull market in gold is still intact.
All right, so you see some opportunities then?
Yeah, some companies that we're looking at is Barrick Gold. Great free cash generator. They got about $3 billion of free cash flow on their balance sheet. They have a strong balance sheet. They have a net positive debt, meaning that their cash is higher than their total debt on their balance sheet. And during their last quarter, they increased their dividend 140% year over year. They're going to pay shareholders 42 cents per share by way of a dividend. And they're targeting a policy of about 50% of attributable free cash flow back to shareholders. And remember, Barrick is not just a pure gold play. It does have a copper profile to it as well.
Anybody compare to that, or is that just isn't it a class by itself almost?
It is a class on its own. The next other material stocks that we do like is the wheat and precious metals or Ninko Eagle Mines.
All right, we're going to wrap it up there, Michael. Thank you as always for joining us. Appreciate it.
Thank you.
Cheers. And that was Michael DeHaul, Senior Portfolio Manager at DeHaul Investment Partners at Raymond James. Coming up, CEO of BRP joins us to take a closer look into the company's fourth quarter performance and tells us what's ahead for the maker of Skidoos and Sea-Doos. Well, shares of BRP are up today after the company ended its fourth quarter with strong results, posting revenue of more than $2.45 billion, up 16% from a year ago. The company also saw a sharp increase in profitability as strong demand for off-road vehicles and personal watercraft continued to drive performance. The estimate beating results, marking a rebound for the company after shares slipped in February. To take a closer look, we're joined now by the CEO of BRP, Denis Levotte. Denis, thank you very much for joining us.
Hello, Roger. Thank you very much for having us.
You've been there a couple of months. You're making it look easy.
Yeah, sure. Great company, and you've seen the results, right? We're posting a growth for fiscal 26. We also announced a guidance of a growth for fiscal 27. So the momentum is very strong here.
What went right for you? A 16% jump in the fourth quarter, earnings beat for the expectations. What did you like about this quarter that stands out for you?
Well, this quarter actually showed that, the DNA of BRP is to offer power sport product, a lot of innovation to the client. This is what we did, and it pays off. Because in the Q4, we've been increasing in North America, especially in off-road vehicle, by 12% our retail volume. And this is totally outstanding. And this is mostly, by the way, on the SSV market with our new product, Defender HD11, totally new platform, and it worked very well.
What is that? The SSD, you said?
Yeah, these are side-by-side vehicles.
Okay.
And this is really the biggest market we're having here in Canada, as well as in the US. These were the two biggest quarter ever that we had in the Q3 and Q4, in Canada. And in the US, we continue growing.
And where do you see, you're optimistic on what is coming up. I think you're seeing you're predicting growth of about 7% in sales. I think 7-8%, I did quick math. Where do you see that coming from, and how do you meet that?
These are twofold. The upcoming growth in 27 will be coming again from the off-road vehicle. This is a very booming market, both on the recreational part, but also on the utility part that we are joining professional using our vehicle, and this is very big. So there will be a piece of even carryover of what we did in the Q4, and we're going to continue profiting by this boom that we're having. Also, on the other hand, our bread and butter historical, as you know, are the ski-doos and the sea-doos, and the winter continuing helps us on the ski-doo, and we have a very big portfolio of order by our dealer on both of these also.
I'm wishing, for the record, I'm wishing winter would go away. You mentioned the professional market. What is that, and what kind of potential do you see there?
Well, there is a potential, actually. This is the biggest growing segment in North America on the side-by-side vehicle. These are professional, usually, example, farmers that would use our vehicle. Now we're putting cabins on them, even HVAC, so it's very comfortable to use. And we are really doing tough and very capable products, and then hence the success that we're having. So this is where we are growing the most in North America.
And with you faced some headwinds. With the tariffs have been around, costs have gone up. How did you manage those two things over the last little while, and how do you see that moving forward?
Well, as you can see, we post a very profitable result, right, despite the tariffs. Tariffs are more or less an impact of 90 million. We can live with that so far. And then, of course, let's see how it develops in the future. But we have been proving to be agile, and we'll continue to be.
And how are you? What are you expecting for the tariffs moving forward? Are you factoring them in at that same rate, higher rates, or that they might go away with a new deal?
No, as per the tariff, we just cooked in the exact same rate as we had in the past.
Okay, and looking back, you had the EV impairment. That's now off. Has that changed how you move forward? Do you see a potential for EV still?
No, not really. It doesn't change much, because in the sense that when we did the investment, of course, we were foreseeing a quicker EV pickup of the market, as everyone did in all the industries, including automotive industry. Not the case, so we have to make this write-off, but it doesn't mean that we get away from this business. We see a future for that. We have excellent electric motorbikes that we will continue pushing on the market. And also we have some success with the electric ATV, especially, which are demanded all around the planet, by the way.
And with everything that's unfolding in the Middle East, does that change your thoughts on your guidance on what's next? Any concerns about fuel, things like that?
I would say short term, not really, because we took some precaution in the guidance. The guidance is going from $5 EPS to $6 EPS. And number one, the markets down there are not that big for us. We are big in North America, in Latin America, and Southeast Asia, but the markets down there are not that big. As per the first half of this year, we are hedged and covered in most of our purchase of raw materials. And we cooked in our guidance $100 a barrel, see what happens in our direct costs. I said before, but we have a strong momentum. So in terms of orders, the Q1 and the Q2 of this year are almost done. So what we did is that we took a precaution, but that would come more from the potential global economy of a more difficult second half of the year, if it happens, and a 5% decrease in the volume is what we cooked in the low range of our guidance. So from that standpoint, I think we've been cautious on what we are giving, and hopefully we are working to deliver the upper range of the guidance.
And just from a personal, it's been what now, 2 months since you came over. What are you finding the difference between being in the auto industry and being in the recreational vehicle or recreational sector?
Two things at the same time. There are things that are the same. We are a volume industry making hundreds of thousands of vehicles, working B2B to C through dealerships. And then you find the same challenges as you find in the auto industry. The size of the brand, the power of the brand, working with the dealers, the way you can control your economics, your quality, working, we talked about, in the regulation environment, etc. This is all the same. Now, the products are very different, and this is what attracted me here. I'm a fanatic of riding motorcycles, and let me tell you that the products that BRP is producing, would it be on the snow, on the water, or on the ground, are fantastic dream machines, and that is a big difference.
All right, and you have one of the e-bikes?
Yeah, of course, I do. Yeah, I've been testing all of them.
Okay, well, we'll wrap it up there, Denis, but thank you very much for joining us today.
Okay, thank you very much for having us. Bye-bye.
Take care. Denis Levotte is the CEO of BRP. When we come back, we'll have more on the unfolding news in Iran and more. An English-only message of condolences by the CEO of Air Canada after the death of two pilots in that crash at LaGuardia in New York. One of the pilots English, one of the pilots French, has ignited a firestorm for the company. The CEO is being called on to resign by Quebec's premier, and the Prime Minister even called the message lacking compassion. How did this happen, and what should Air Canada do right now? Joining us is Bruce McClellan, Chair of Proof Strategies. Bruce, thanks very much for joining us.
Thank you.
What was your initial reaction when you saw the first part go out, and what has followed since?
Well, I think it's a case study in very unfortunate corporate communications. I mean, first of all, tragic loss, horrible loss of two pilots and injuries to passengers and injuries to ground crew. The time now is to focus on grieving and to be honoring the loss of these pilots and what they did in their career. Instead, through a complete own goal, the CEO has turned the issue around to be his lack of speaking French, and it's just regrettable. It could have been entirely avoided with some better communications planning, and I think a little more commitment from the CEO.
Where does it? Are they both to blame, the CEO and the comms team, or is this on one side or the other?
Well, I do think the comms team has to shoulder some of it. And, I'm speaking as a communications professional with 4 decades of experience, and also as someone who worked in Ottawa on Parliament Hill as chief of staff to a federal cabinet minister. I was required, as an Anglophone moving to Ottawa from Toronto, I was required to take French lessons and to improve my French. And even though I am an Anglophone, my French did improve in the 2 years I was in Ottawa. And the communications team as well needs to make sure that they encourage and support the spokesperson, the CEO, to practice and use the French. This is not a complicated situation here. Toutes nos condoléances, mes plus sincères condoléances. These are words that can be said by anybody. And the point is, you make an effort. You show you make the gesture that you are trying. and it's symbolic. And it shows to employees, many of whom are Francophone, that you're trying and working hard as your CEO to earn their trust and to be their leader.
And one of the things you pointed out in your notes here, it took a minute 40 to mention he was saddened by their loss. How did this even get written originally?
Well, it's an interesting point here because, the company needed to do some basic communicating. What was the plane? What was the flight number? How many passengers? What's the phone number where you can call for more information? This is all important information, but that's not how you use your CEO. Your CEO should be communicating at the high level of tone and overall corporate direction and corporate care. Instead, they used valuable seconds of the CEO's video message, giving out basic information that could have been handled by a communications officer. Instead, delaying how long it took him to say that he was very sorry for the loss of these two pilots. I just think that, with some thinking, there could have been better planning around how and who handles the communication. It was to their credit that it was done quickly. But unfortunately, I think they could have had a better division of who said what and where it was available.
And I mean, this isn't even, what it looks at appears that Air Canada really had nothing to do with this. It was a miscommunication on the ground and not anything to do with the pilots. And now this has turned into a disaster for them in so many other ways. How do they work through this? What do they do with this?
Well, you're right about it being, very regrettable because, this story has been covered in the Wall Street Journal. Air Canada is not only an important national company for Canada, but it's a publicly traded stock and company. So it's very regrettable that now this is the story that's getting attention instead of the accident and how to learn from the accident and improve safety. So I would say that this is a board governance issue. The CEO's performance is board governance responsibility, and as is their public reputation and their public trust. So I would hope that the board is concerned about what's happened and starts to raise some questions and put this on their own agenda for what is being done to ensure that Air Canada lives up to its legal responsibilities to be a bilingual company, its cultural responsibilities as a company headquartered in Montreal, and as a major international corporation that's taking trust seriously in how it conducts itself.
And now this isn't his first faux pas when it comes to French. How important is it him being bilingual as opposed to the other skill sets that he brings to that position?
Well, you often hear companies that say, CEO skills are required. Bilingual is an asset. This is not an oil company in Calgary or a food manufacturer in Ontario or a fisheries company in Newfoundland. This is our national airline headquartered in Montreal with a legal statutory requirement to be bilingual. I think this is, again, a question that the board has to ask themselves. Are we doing enough here, and are we expecting enough from our CEO? Again, I'm speaking to you as an Anglophone from Toronto who spent 2 years of tutoring in French in Ottawa when I worked there, and I did improve. I did learn to speak more French in doing that, and there's no reason why he couldn't include French in his video messages.
Now, does he survive this, and does the comms team survive this?
Well, it's a great question. Sometimes people survive things when you might not expect them to. Sometimes there are mitigating factors that we're not all aware of. Again, I think it's up to the board to decide if they're getting the performance that they need from their CEO or where areas could be improved.
Okay, we have to wrap it up there. But Bruce, thank you very much for joining us today.
Thank you very much.
Bruce McClellan is the chair of Proof Strategies. When we come back, a new verdict found Meta and Google liable in a civil trial over social media addiction. We'll get more from one of the plaintiff's lawyers after this. Shares of BRP are trading higher today, up about 2.5% after the maker of skidoos and recreational vehicles reported revenue and profit in its latest quarter that beat expectations. Revenue jumped 17% compared to the year before. BRP also boosted its dividend and delivered a 2027 revenue outlook that came in above estimates. And TD is cutting its forecast for home sales and prices for the year due to weak performance over the last 2 quarters. In a new report, TD Economics now expects home sales to fall 1.8% year over year and prices to move 0.3% lower across the country. The report says housing activity will likely take most of the year to recoup losses as sales remain constrained by economic uncertainty and cost of living pressures. The CEO of Air Canada has apologized for his English-only condolence video following the fatal crash at LaGuardia Airport. Michael Rousseau says, despite many lessons over the years, he is still unable to express himself adequately in French. He added that he is saddened by his inability to speak French and that it has shifted attention away from the grief of the families. The apology comes after Prime Minister Mark Carney called the lack of French disappointing. Looking at the markets, quite the turn from the morning. TSX off by nearly a full point right now. And south of the border, situation not much different. Everybody is in the red right now. The S&P 500 off by 1.2. The Dow off by 0.86. And the NASDAQ down by 1.65. Meta and Google were found liable in a landmark civil trial over social media addiction. The tech giants must pay $3 million US in damages after a jury found the companies caused harm to a younger user with social media platforms. For more on this perspective, and to get his perspective, I'm joined by one of the plaintiff's lawyers, Matthew Bergman, founding attorney of the Social Media Victims Law Center. Matthew, thank you very much for joining us today.
Thank you for being here.
Did you think this was the way it was going to go?
Well, we were very hopeful, particularly as the case progressed and the evidence was brought to light over what these companies knew about the addictive nature of their platforms, about their intentional decision to addict kids, and their knowing decision to subordinate the safety of kids to the profits that they earned from engaging them in subjecting them to advertising.
And we want to talk about that, but I just want to ask about the fine. It's $3 million, a drop in the bucket. Should it have been more, or does that matter even?
Well, this was a $3 million in compensatory damages, $3 million in punitive damages, and this is the first of many cases to come. So we're very pleased with the jury's award. We think it was appropriate. It certainly was the product of 8.5 days of deliberation and represented to us a watershed moment in the ability to hold social media companies accountable for the carnage their platforms are inflicting on young people.
What were the key things from your point, do you think, that swayed them in this decision?
Well, I think the key things was the disjuncture between Meta and YouTube's public pronouncements about caring about youth safety and the actual documents that were brought to light in the case and presented to the jury. The documents that Meta and Google and YouTube knew that their platforms were addictive and intentionally designed them to be so. And when they were provided with opportunities to have safer platforms, deliberately decided not to implement very easily adopted safety measures because that might cut into their bottom line. I think, and finally, the Meta document, the establishing that Meta knew that the kids who are psychologically vulnerable are the most susceptible to social media addiction and mental health harms.
Now, Meta has said it will appeal. Do you think other things will still change even though that appeal is underway? Because I guess they realize they might be opening up a big barn door there.
Well, I fully expect that they will appeal, and I'm very excited about presenting our arguments to the Court of Appeals. given the care and fortitude that the trial court exercised throughout the trial, I'm not overly worried about an appellate risk. But this is the first of many cases. The most significant thing was that this is the first time in history that a jury has ever held a social media company liable for hurting kids. There are thousands of cases that are in process behind this case. This case is the tip of the spear. It is the first battle in a very long war. We have no illusions that this is the end, but as Churchill said, this may not be the end, but it's the end of the beginning.
And now the jury was 10-2, so it wasn't unanimous. Does that worry you at all that a lot of people are unsure about what to do with these allegations?
No, I think it shows how the jury system worked. Look, these companies have unlimited money to hire the best lawyers in the world to make the best arguments they possibly can. In this case, their argument was basically blame the victim and blame the mom and avoid any responsibility. And, 10 of the 12 jurors found those arguments to be unpersuasive and were gratified by that.
Okay, and with the expected appeal, do you expect anything to change right now, or is this going to take government intervention?
Well, I think that over time, these social media companies are going to have to start bearing the economic costs of their design decisions that are so hurtful to kids. Look, moral persuasion hasn't worked. These documents showed that there were many people of conscience within these companies that brought these dangers to the CEOs, and the CEOs routinely chose profits over safety. Being excoriated in front of Congress doesn't seem to make a difference. News revelations don't seem to make a difference. The only thing that's going to make a difference is when they actually have to pay the costs of what their platforms are doing to young people. If we hit them in the pocketbook, their hearts and minds will follow. So while federal regulation is an important component of the quest to make the internet safer for kids, ultimately, appealing to their pocketbook, I think, is the most direct and important and efficacious way to proceed.
What's the main thing you think they need to do, or you would like to see them do?
Turn off the algorithms. Show kids what they want to see, not what they can't look away from. Turn off the infinite scroll. Turn off the features that are explicitly designed to make these platforms addictive to young people. Provide warnings. Provide adequate age and identity verification so that kids are not vulnerable to adult sexual predators online. All of these things could be done easily at minimum expense, at minimum implementation. Most of these suggestions were actually made by conscientious people within Meta and conscientious people within YouTube, and were rejected precisely for the reason that they might cost some engagement and impede the advertising revenue that these companies are gleaning from kids. We think that a diminishment in their advertising revenue is a small price to pay to keep our kids safe online.
And would you be okay if you had the option of turning those things off, or do you want them done?
Well, I think that it depends on the age. We know that young people, adolescents, don't have the reasoning capacity of adults, not because they're bad kids. It's a neurologic fact. So I think as people get older, it's appropriate to give them more options online. But I think when you're talking about, teens and adolescents with, underdeveloped frontal cortices and kids that by definition are so highly susceptible to peer pressure and needy of the adulation of their friends, I think you have to err on the side of caution.
Okay, we have to wrap it up there, but Matthew, thank you very much for joining us.
Thank you.
Matthew Bergman is founding attorney of the Social Media Victims Law Center. Shares of Pizza Pizza are trading higher following their fourth quarter earnings release. We'll have the CEO on after the break. Shares of Pizza are getting a lift after the Ontario-based company posted its fourth quarter and annual results. This comes as the sector has been facing pressure from geopolitical uncertainty and a more cautious consumer. Joining us now is Paul Goddard, the president and CEO of Pizza. Paul, thanks very much for joining us.
Thanks for having me.
We were just talking off air. I mean, you probably have to be in one of the most difficult industries right now, the restaurant.
I think there's no doubt it is one of the most competitive out there. And it has been for a long time. And I think it's just exacerbated in the current environment. But we've been around a long time, coming up to 60 years. So we've been through a number of cycles, and we feel like we can weather this kind of thing.
And so what led to this quarter and the year, the success of that?
Well, I think it was, a positive same-store sale. It wasn't our banner year, but we're certainly happy to be
But
positive.
I think most people right now in your industry would be happy with...
Some are negative, some are positive, but I would say generally most people are not doing so hot. So we do expect actually better for ourselves, but we are positive on the year. So we'll take that. And, our traffic overall in the year was up. That's how we really measure success. It's just the volume of transactions really shows people are still ordering from us and growing. So, we'd still like to see bigger numbers, obviously, but it is a tough macro environment. And so I think overall we've been innovating, focusing on value, which we're really known for, sort of quality and value. And so we're going to lean into that even further and just continue innovating on our tech platforms, our on-time delivery, things like that, things we can control. We can kind of have those levers to pull and reinvest, but then also be very cost conscious as well in this environment fiscally, just because the macro environment is so challenging.
All right, and I'm not saying this in any kind of a context. When it comes to pizza, how do you innovate? What do you do with it?
Well, you can innovate not only on the food. I mean, things like for us, an example would be crusts. I mean, we have been very successful with a gluten-free crust, I should say, cauliflower crust. We're innovating some new crust this year and other, healthy ones. And there's also a line called Gourmet Thins we have, which are much thinner. So actually, you can really engineer the product, even though it's dough, sauce, and cheese, basically, with toppings. I mean, it's pretty simple, obviously. But you can actually innovate. You can make it healthier, smaller, bigger. We've also gone the other way and had bigger pizzas like the Double XL with Vladdy Jr. coming to us and saying, can I do a special with you guys, which was really nice. He approached us. Yeah. And that was great timing with the Blue Jays last year. So I guess we're pretty nimble on that side. We're always innovating on the menu, but also behind the scenes too, in terms of the IT infrastructure we have. It's a really scalable cloud-based structure. We invest all the time, I think more than most of our competitors or peer group. In terms of percent of IT spend versus sales. So that really puts us in good stead with our apps and our digital refresh that we're doing as well. So it allows us to provide better loyalty, innovation. The restaurant itself gets innovated. We can automate more things. So some of it's not the sexy parts, but it's really important to be efficient. And then the food itself, that we want customers to think it's great, tasty food and get them coming back again.
Okay, and I've got a bunch of questions from all that. First up, innovating with technology, the oven costs that were last time you were here, there were concerns about that. Yeah. How are you dealing with that?
Yeah, we still see increased costs really there. I mean, obviously there's now renewed tariff uncertainty with, are they legal or what have you, given the ruling in the United States. But we still see suppliers very nervous, as you might expect, and looking for increases. Generally, on our food side, we have a Canadian supplied food basket almost exclusively. So we don't really have too much exposure there, really at all. But in terms of food equipment, we do. So it does impact things like construction costs. So we need to be really careful about our overall construction budget because the franchisee at the end of the day is paying for that restaurant. So we have a budget that we want to deliver to them that gives them a good return on their investment. So it is hard. We can control things, cut some costs in some areas, but there's some costs we can't control. And we'll see what happens with USMCA and other things as well. So we're positioned quite defensively right now and just being a little more selective even than we already were with how we pick sites and does the economic model make sense for a new franchisee coming in.
And you mentioned the Canadian foods, your food basket is Canadian. That must be a challenge with the expenses that are coming with. How are you coping with that?
Well, it is. I mean, we've held the line quite well. It's been better generally, for a couple of years. It was quite awful, or, pre-COVID, COVID. There's a whole inflationary effect. It's been okay, but now with the macro geopolitical issues, obviously with this sort of oil shock that seems to be going on, and we don't know how long it's going to go on for. No one really does, affecting every company, every country, really. So I do think my personal view would be that inflation is going to pose a risk for a while, and that will have a trickle-down effect to fuel and non-discretionary spend of consumers. So that could really exacerbate issues, which haven't actually been that bad generally the last couple of years, maybe 2 years ago. But now I do think it is getting a little worse. Headwinds are getting stronger.
One of the challenges you mentioned, fuel for your staff, for drivers. How are they being compensated with everything, with prices that are going up, or do you use outside sources?
For our drivers, I mean, they are they're independent contractors. They work for the restaurants, so they're actually working for them. So what they really rely on actually is tips. And so it really comes back to great service. So come back to our on-time, our free guarantee. We have a great track record there and a lot of metrics. So we have things, an example of innovation, how it helps the driver is if we now, which we do provide visual order tracking, just like on a third-party delivery platform, you can see where your order is on the map getting to your home. If it gets there in, say, 32 minutes, which is a typical average order, it's under 40 minutes, it's going to be, you're paying for it. But if you get there at 41 minutes, it's free. And so our drivers know that, and they deliver very consistently there. And if they provide it with a great experience, they've got a uniform on, they're providing it hot and fresh at the doorstep, then they're going to get a good tip. And people actually pre-tip as well because they're used to us. And
so is the company helping out at all?
We're not helping the contractors. We basically try and help them by driving sales. That's really all we can do. We're not in the business of subsidizing individual drivers, but what our job is to make customers order more frequently and hopefully a bigger basket, given our specials, make them compelling, so that overall the sales are good, and they get essentially a percentage of that through their tips, really, and they really rely on that because that's their lifeblood.
Okay, and with your customers, GLP-1s is everything. Everybody's talking about weight loss. What kind of an impact is having because pizza's not always perceived as being the healthiest of foods.
Right, it's certainly not perceived as it, and that's a whole other discussion. But it is actually, at least a pizza is a baked item. It's you can make it extremely healthy with all the 4 food groups. You can have it thin crust, easy on the cheese, grilled chicken, hot peppers, and avoid any very heavily caloric items, right? But there certainly is the sort of joy factor for a lot of people that want a deep dish pizza, and that's fine too, right? We sell a lot of those. But I think that's a trend for sure. We'll see how long it stays, but people are more health conscious. We haven't really seen that particularly be a negative, I would say, at this point. But what we do to sort of preempt that is offer a big array of healthier items. We have some baked items. We've got a lot of gluten-free, plant-based items. Thinner crust items, cauliflower with 2 servings of cauliflower in one of our crusts. So if you can provide a lot of healthy choices, then people can choose for themselves. So we think even if the people migrated that way, we'd be fine because we're sort of economically neutral on that as long as we still get transactions for the healthier pizzas.
Okay. We've got to wrap it up there. But Paul, thank you very much for coming in. We appreciate it.
Thanks for having me, Roger.
That's Paul Goddard, the president and CEO of Pizza Pizza. Still ahead, today's Market Movers with Bloomberg's Matthew Griffin. All right, for some movers south of the border, we're joined now by Bloomberg Equities reporter Matthew Griffin. Matthew, thanks as always for joining us.
Roger, thanks for having me on.
Okay, SanDisk, it's up, it's down, it's up, it's down. Google coming out with the AI training, so now it's taking a hit.
Yes, well, SanDisk seems to have only gone up over the past year or so, but now taking a hit, shares down almost 10%. You mentioned this research out of Google, the search giant, of course, Alphabet, the parent company there, said it developed an algorithm called TurboQuant that can vastly improve the efficiency of memory use in AI training. They say at least 6-fold. This is seen on Wall Street as a threat to the investment thesis for SanDisk, Micron, companies like it that make memory chips, because there's been really strong demand from companies that use those chips to train and run AI models. Of course, you need to access data for that. Now, analysts have been quick to defend these stocks. There's an idea that you might remember from the DeepSeek volatility at the beginning of last year, Jevons paradox, this idea that actually in the long run, if something gets cheaper, demand for it can really grow. So maybe that's good for memory makers in the long run because you'll have demand for AI grow. That being said, it seems like investors maybe have been looking for an excuse to sell these names. SanDisk still up about 1,000% over the last 12 months. But it started falling on after March 19th, down about 20% since then, even before this latest catalyst for a decline.
Okay, and cyber war going on reportedly, an pro-Iranian group hacking Stryker, allegations of that. But Stryker, how's it doing?
Yeah, well, Stryker actually today, one of the few patches of green on my screen, shares up about 2% after the company said they had brought back online their electronic ordering and most manufacturing after the cyber attack. That happened, or at least was disclosed a couple weeks ago. And a pro-Iran group called Hundala has taken responsibility for it. The stock of the medical technology company did take a hit, and some procedures for patients were delayed. That being said, Stryker has said that the safety of their products, which include robots for surgery, implants, things like that, has not been affected by the attack.
All right, we've got to wrap it up there, sir. We're a little short today, Matthew, but always a pleasure to talk to you, sir.
Pleasure to talk to you too, Roger.
Bloomberg's Matthew Griffin. And that wraps up this edition of Trading Day. I'm Roger Peterson. Thanks very much for joining us. Have yourself a great afternoon.